Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
In this video, I'll be going through all the things that I wish I knew when I just started investing. And I'm treating this video as if I'm speaking to someone who's never heard about investing in stocks before. They're not sure where to get started. And maybe they have $100,000 to get started. And these are the things that I think I would like to know back 8 years ago when I just started investing. So that's the premise of this video. Hope you enjoy. If you're a brand new investor, I think you're going to find great value in this video. If you're a little bit more experienced, like maybe you're a member of our community already, then this will just be a refresher for you. So let's get right into it. So you have the option of joining the Learn, Grow, Invest community to have a safe place where you can learn, grow, and invest. So we create a space for you to learn how to invest, to grow in community, and to invest with confidence. So you can join us at any time. You can use the barcode on the screen, or you can use the link in the description of this video. So what I'm going to go through today, again, I'm thinking about what all the things I need to know if I'm just starting as an investor. So I'm going to talk about why invest in stocks, just in case you're wondering, why is this a suitable option for you? I'll talk about how to get started. I'll talk about the things that you'll need to start investing right away. I'll talk about ways you can invest in stocks. I'll talk about how to invest your first 100,000, how you should think about divvying up that money, if you should at all. I'll talk about that, and then I'll close out with the basics of market research, what you should be looking for as you're researching stocks to add to your portfolio, and then we'll close with some next steps. So why invest in stocks? And this question I've answered so many times, but here are a few things that you should consider as to why stocks may be the right thing for you to invest in. So first we'll start with what a stock is. And it's a fractional ownership in a publicly listed company. It's simply the issuance of shares to those who have invested capital within the company. And share prices are set arbitrarily whenever a company is choosing to issue them. And the more shares you own compared to the total shares distributed, that determines your percentage ownership. So that's all it is. And let's talk about the ways in which you can earn money from it. So first, companies may issue capital. Well, they're issuing shares to raise capital, right? This is really the most primary and basic function. Now they may use that capital to do different things like clear debts, grow their business. Maybe an existing shareholder would just like to receive some gains on their investment. Multiple reasons, but it's centered around the need to raise capital. So you make money when your shares increase in value. That means maybe you paid $1 for it and it's now higher, or if the company chooses to pay a dividend. Now, dividends aren't guaranteed, and though we're not going to go in depth into dividends in this video, that's one of the ways in which you can make money with stocks, and it's actually a great way if you think about it. So why stocks? It's a low barrier to entry, meaning you can start with as little as $5,000, and in some cases less, right? So if there's an IPO or some market offer and you're able to maybe purchase a minimum of 1,000 shares, that may give you the opportunity to purchase shares for as little as $1,000, but it's low, it's easy to access, and it's pretty much available for all, right? It fits those who are long-term investors and short-term investors, right? So I cannot think of a goal that you would have that stocks couldn't help you get to that goal. Now, some goals are unrealistic, which we'll get to in another video. But the point is here, it can fit a multitude of goals. There are many ways to do it. And so it's a great opportunity to get started. And then finally, of course, there are multiple ways to invest. And we'll get into the different ways that you can get exposure to stocks. I'll only share 3 of them, but there's maybe some different options that can't fit into the scope of this video. But just know that it's easy to get started, and there are multiple ways to do it. So the first time a company seeks to raise capital publicly, it's called an initial public offer, or IPO. You might have heard that term before. And this is simply a company coming public for the first time, seeking to raise capital for one of the reasons I mentioned before. And so they'll create a prospectus, and that will have information about the details of the offer. We'll talk about prospectus in the next few slides. The second time a company raises funds is called an initial public offer, or APO. So you can only do an IPO once, but you can do an APO multiple times, right? And this is essentially for the same reason, to raise capital for a multitude of reasons. And so, of course, you may hear about these terms as the longer you invest. So after the initial public offer, these shares are now available for trading on the stock market. So usually how it works, the IPO prospectus is out. There's usually a period, let's say a few weeks to a month, or maybe a little bit more. The offer closes. It goes through an approval process. Once approved, the shares are now available for trading, right? So an IPO is not the only time to buy. In some cases, it may be a great opportunity to buy for multiple reasons, but it's not the only time that you can purchase a company. Once a company is listed on the stock market, you can purchase shares anytime. So a prospectus is a legal document that provides you with information about the investment offering. Now, once a company is doing an IPO, they'll partner with a broker, and that broker helps them to prepare to come to market, right? So that prospectus and the creation of it is a process that can take months, sometimes years, depending on where the company is at when they first start that relationship with the broker. But when it gets to the prospectus stage, it has gone through a series of processes, and now they're ready to raise capital to the public. They issue that prospectus for the public to review, and then they decide whether or not they want to make an investment decision or not based on what they see in the prospectus. So this is an example, or a screenshot rather, from the Regency Petroleum Company Limited prospectus that came out a few years back. So in this we see how many shares they're issuing to the public or making available to the public. It shows you the different pools. Now we have what's called here a non-reserve pool or a reserve pool. It really depends. These may vary from time to time depending on how the capital raise is structured. But there's usually an allocation per group or pool, and then there's usually a share price or an invitation price. So we see here where the invitation price is $1 per share, and it shows you that they're seeking to raise a total of 287 million. Within the prospectus itself, we have some key areas. Now, it's strongly recommended that you read the entire prospectus, but of course, these are some of the most important areas for you to review. So the company overview will give you details about the company, what they do, how long they've been in operation, so on and so forth. The offer details is similar to what you're seeing in terms of that screenshot, how much they're raising, what's the price of each shares, etc. You'll usually have a section called use of proceeds. This is where they tell you how they're going to use the money. Next, we may have, now this part is optional. You may have pre-IPO transactions. So if there's any change in structure of the shares, maybe shares were multiplied, maybe shares were changed somehow, it will show there. Then we have what's called a management discussion and analysis. This is where you get now commentary from the management on the past performance of the company. They'll do somewhat of an analysis on their financials to give you some insight as to why the numbers may be what they are. And then they should likely include an outlook for the future, right? Next, we'll have their financial statements. Now, hopefully you can get, if the company has been around for a while, at least 3 years, 5 years in the back, but it really depends on the state of the company. If it's a brand new company, you may not get as much as 5 years. It may be 2 years, 3 years, depending on where they're starting from. Next, we usually look for a dividend policy. This is where the company states their intent as it relates to dividends. Now, they can say they have no intent to issue dividends. They can say they're going to do 25% of their profits, 50% of their profits, and so on and so forth. They'll usually have some risks that you should consider based on the type of company, type of industry, etc. And then finally, you may see how to apply. So since this is usually done along with a broker, the broker will have at the back of that prospectus how you can apply, whether through the application form, the broker website. There may be co-brokers or other brokers are part of it as well. They'll list all of that information there. So this is a summary of the prospectus, and this is a document that you definitely want to read through before you participate in an IPO. So let's talk about how to get started with stocks. So there are 3 ways, really. Well, 3 things to think about, I would say, not necessarily 3 ways here. So all investments in stocks will include a broker. A broker has to be included, but there are ways to purchase your stocks directly, though it will be connected to a brokerage account. All right. So once you're signed up with a broker, and I'll get through those requirements shortly, then you can either email or call that broker to place orders. I'll talk about the pros and cons of that. Some brokers have their own platform where you can place your orders directly, purchase different securities from them or products from them. They may have an IPO platform that you can use to apply for different offers. Then finally, we have the JTrader Pro platform, which I recommend that you learn how to use because that's the best way to buy and sell stocks on your own. So you will need a brokerage account. This is absolutely required. You can't do it without one. You'll need to fill out some basic documentation, and I'll talk about that a little bit more on the next slide. And then you will need to make an initial deposit if you're opening this account outside of a market offer. Now, if you're purchasing an IPO and that's your first time, that will cover everything that you will need. But if it's not an IPO and you're opening an account directly, you'll need an initial deposit. These are the brokers that we have at the point of this recording. This may change at some point in the future, depending on different things, right? So we have 14 brokers for the Jamaica Stock Exchange. And it really depends on what you're looking for, whether flexibility. Some have different initial amounts. Some have different services that they provide along with the ability to buy or sell stocks. So it really depends on what you're looking for. What I usually say to persons is that the very first place to look is if you have a particular bank account, you can check to see if that bank has a broker associated with it, because that will make it extremely convenient to be able to fund your account. But of course, if you have multiple bank accounts or multiple options, it's really up to you to investigate and see which one will suit what you're looking for. These are the things that they will ask you for. You'll need a TRN. You'll need an ID of some kind. You'll need proof of address. And this will actually apply to persons who are outside Jamaica as well. You can apply for a TRN online if you don't have one. Next, you'll need source of funds. Now, if you're under 18, you can have a brokerage account, but your parent or guardian would need to be on that account with you. And then once you get to 18, you're able to reclaim that account. You'll need 2 character references. And then the lowest I've seen is a starting deposit of $5,000. And I've seen it go as high as $1 million. So it really depends on the broker that you choose and what you're looking for, what their requirements are. So when you want to think about a broker to choose, I do recommend that you have multiple brokerage accounts. I'll get to that soon. You think about the convenience to access. Think about how easy it may be to fund that account when you're purchasing your own stocks, or to actually get back that money when you're selling your stocks. Think about the responsiveness in support. And this is why I strongly advocate for multiple brokerage accounts, because you may not get the type of service that you're looking for all the time, and you need the flexibility to be able to place your orders urgently, because there may be some opportunities that you really want to take advantage of, and you don't want to be limited if that particular broker is not responding as you would like. And then, of course, I recommend you use JTrader Pro directly for buying and selling shares. So some brokers, as I mentioned before, will have their own trading platforms, and then a good amount are connected through the JSE's JTrader Pro platform. Now, we have a video on this channel to help you to learn how to use JTrader. I recommend that you watch that video, learn how it works, see how you can sign up and all of that, and then start using it right away. I said before, and I'm going to strongly recommend it here, that you have more than one brokerage account. At the point of this video, I have a few, and it's something that I found that helps me to get the flexibility I'm looking for. So there's nothing wrong with having more than one. If you have a company as well, your company can actually have a brokerage account. So there's nothing wrong with that as well. You can invest as a company. And so you want to take advantage of that. And there's no cost. So open as many as you'd like. So at this point, I want to pause to just invite you, before we get into the details of how to invest, I want to invite you to join our monthly investment challenge membership program. This is where we go into the details now of how to invest, how to do research, how to build a portfolio, what things to look for, etc. So this is a monthly program that happens every single month. We meet on the last Saturday of every month, and no matter when you're watching this video, you're able to sign up, get access to all the past videos, and just join a community of investors to help you to just build up confidence as an investor. So for more information, the link is in the description of this video. You can sign up at any time. So let's talk about ways to invest in stocks. And this is a part that I think a lot of people are waiting for. Well, this is right before the next part. So you can think about it in three ways, right? You can have direct exposure. So this is where you want to own your stocks outright. Now, this is the part that you want to work towards. If you're not starting out here, this is where you want to end up. But of course, there are ways like, for example, a unit trust that I'll talk about shortly that will give you exposure to stocks, but you're not owning them outright. Okay. Next, we have fixed income. So these are preference shares. These are great if you're looking for a consistent rate of return. It's fixed. It's usually for either a period of 2 to 3 years, or it can be something that goes on in perpetuity. So this is a great way if you have a large amount of capital, or at least decent capital, and you want a predictable rate of return, then preference shares are a great option for that. Next, we have the unit trust or equity fund or mutual fund option. These are available at multiple brokers, and you really want to pay attention to how it is constructed, what is it invested in, what fees, if any, and the past performance. So those are some of the things to think about there. So a unit trust is a collective investment scheme. It's sold as units, and it's purchased directly from your broker, and it's invested usually in a pool of assets. So whether a pool of stocks, or maybe a mixture of stocks and real estate, or stocks, real estate, and some fixed income instruments, it really depends. Now, you have different types of unit trusts for different things. And so that's why I say it's important to understand how it is constructed, so you know what to choose. So these are typically diversified. The aim of a unit trust is to provide a diversified form of investment. It's usually managed by a fund manager or a trustee, depending on the type of fund or trust. It does not give you the control of being able to choose when to buy, when to sell. So you won't have that control if you're looking for it, but this may work out for a beginner. And then, of course, they're not usually going to be providing any dividends or income. So it's really about the value of the units increasing. And so when you purchase at a certain price, if later on the value per unit has gone up, that's how you're able to make money. And of course, because they're extremely diversified, you have to know that it's invested in the right underlying asset so that you have a good chance of it increasing in value. So you have mutual funds, equity funds, real estate unit trusts, and other types. They all operate in a similar way. It really comes down to the underlying asset. You do want to look out for the fee structure. You do want to look out for how it is managed. You do want to look out for the historical performance. If it's been around for at least 5 years, I'd look at that average return for the past 5 years. And then you want to see how it has been performing before you make the decision to purchase. So I cannot stress that enough. You want to make sure you understand how it is constructed. So next we have the option of a preference share, as I mentioned. So this is a special type of share that provides privileges like receiving a fixed dividend, right? So it may be quarterly, it may be twice per year, it may be once per year. The most common one we've seen is quarterly, and you usually can denote them by a number and a percentage sign on the Jamaica Stock Exchange, right? So these are all examples of preference shares. So you have the Cygnus Credit Investments 10.5 preference shares, and you'll see here that it says due 2025. So this is a case where I'm saying you may have them only for a few years. So at that point, the company may choose to issue another set of preference share, or they may close it out at that point. It really depends. You have some that are perpetual in case of the PBS preference shares. You might have some that are variable, like the 1 through 8 student living. So it really depends on how that particular preference share was designed. The point is, though, you have a set rate of return that you can expect. Now, in some cases, they are tradable, but they may not be as liquid as ordinary shares, right? So that's something that you have to note. And then, of course, you have to be mindful of the specified rate of return. So if you pay more than what it was originally priced at, you may not get the same percentage return that you're expecting, right? So let's talk about investing your first $100,000. Now, if you had $100,000 to invest, or if I was just starting out, these are the things that I would be considering how to invest. And then, as I said, I'll close out with ways to do research. So there are 2 ways to make money from stocks. It's dividends and capital gains, as we mentioned before. Now, dividends are an awesome way. And so, of course, that's one of the things I would recommend that you look into, regardless of the capital that you're starting out with. As a brand new investor, it's an awesome way to get a quick win, to get something that is coming back to you in terms of cash. Now, you have to be mindful to look out for those 30-cent dividend check or 45-cent dividend check. That really just means that you have a small number of shares, and so your dividend checks are going to be small because the dividends are paid per share, right? So the more shares you have, the bigger that dividend check. So there are some things to think about. If your goal is to get consistent income, then you certainly want to look to dividend stocks. If you have 100,000, you really want to have no more than 2 to 3, and you're going to look to maximize the yield, right? So you can get a list of all of the dividend stocks, look to see which ones are paying at the top end in terms of dividend yield, and then you go for those to build a dividend portfolio. Next, you can go directly into preference shares. Now, these are available based on what you saw earlier in terms of screenshots. You have a list of those preference shares as well that you can look through, find out about, look to see what the percentages are, how long they're there for, and whether or not that fits what you're looking for. And then, of course, you have bonds that you can invest in. Now, bonds are essentially a loan that you're giving the company, and they're agreeing to pay you a fixed interest rate based on that bond. When the bond matures, you get back your capital. So three ways that you want to invest in. And these aren't the only 3 ways, but these are 3 ways that I'd be looking for right now if I'm just starting. Now, the very first option I'll mention here is value investing. Now, this is where you're looking for stocks that are trading less than their intrinsic value. So think about a way that stocks have, just like you're able to get a value for your house or your car, stocks are valued. They have a methodology where you can calculate the intrinsic value, and there are stocks that are trading below that value, right? So whatever that intrinsic value is worked out to be, there are stocks that trade less than that. So value investing is where you look for those stocks and you invest in them with the expectation that at some point the market is going to catch up and you're able to now bridge that gap in terms of value, where it will start to trade closer to fair value or above fair value, and that's where your capital gains would come from. Next, you can invest in growth companies. Now, this is where you look for companies that are growing above an average rate compared to their industry. These are typically smaller companies, like maybe on a junior market, and these companies are able to grow a lot faster simply because they are smaller. All right. Then we have blue chip companies. These are well-known companies. You probably have always heard about them. We'll look at a few a little later on, but blue chip companies, well, I'll talk about that soon. All right. So as I mentioned before, value investing is where you look for stocks that have been undervalued by the market, right? So for some reason or another, the market is not trading that stock at its fair value. And I'll just share one metric that you can use to look for something that's undervalued, and that's price to earnings. Now, this is not the only metric that you can use, but this is where you compare a company's share price with its earnings per share, and you have now a relative valuation that you can compare that company to others in the industry, or maybe the market average, right? So a simple example is you may want to compare one financial company with other financial companies. So you look at the PE of that company and you compare it to other companies in the financial sector, and then you can see whether or not it's trading either in line with, below, or above that average for the industry. When you're investing for growth, this is where you're looking for companies that are growing faster than their peers. So if we look at the same financial industry, let's say it's maybe a startup or a company that's on the junior market, but it's in the financial sector, it may be able to grow its revenues by 100, 200%, grow profits by 200, 300% over a 1 to 2 year period. That wouldn't be considered normal for the industry. That is a way to invest. And the expectation is, as this company is able to accelerate its growth, you're able to get value, whether from dividends you're able to pay or capital gains that you may be able to realize because you're able to have such a compelling narrative for shareholders, right? So key things that you want to look for here is future earnings growth. The company has to be growing at a fast pace. So it can't be considered a growth company and they're growing at 5% or their earnings are flat. That wouldn't make sense, right? So they're going to be growing at an above average rate. Their profit margins need to be healthy and growing. The return on equity is going to be above the average for the industry. And as I said, these are typically companies that are on the junior market. And that's because those companies are almost treated as startups. Not all of them are in the truest sense of the term, but they're treated as companies that are smaller and that are expected to grow at a certain rate to eventually become now a mature company that may list on the main market. Blue chip companies, these are ones that I think everybody may have a fair idea of. These are financially stable companies. Now, you can't have a blue chip company that's also treated as a startup, right? Those two don't really go together. So they're financially stable with a history of reliable, consistent performance and consistent dividends. Now, the yield may not be aggressive or high for these blue chip companies, but they're going to pay it consistently. Even if it's a 1%, 2%, 0.5%, it's going to be consistent. So these are 3 companies that may be considered blue chip companies, and that's because they've been around for 10, maybe 20 years or longer. I think Grace Kennedy is over 100 years now. And so these companies have been around for a long time. They're proven companies. Their business models are set. Now they may be expanding to new products or services, but their core business is generating maybe billions of dollars. Their profits are in the hundreds of millions in some cases, if not billions of dollars. And so these are companies that you can expect to continue performing consistently. Of course, there may be also the higher priced ones. I believe at the point of this video, Wisynco is trading at about $21, Seprod at about $84, and so on. So they're typically priced higher, and that's because they've been around for a long time and they're pretty much proven companies. So we're going to close out this video by talking about research. Now I'll go through the basics of what you should be looking for as an investor in terms of companies when you're researching them on the Jamaica Stock Exchange. I'll only be focusing on the instrument summary page. So I'm going to share the link in the description of this video for the company that I'll be looking at. It's a junior market company in this case, where you're going to see the same information relating to the company when you go to the Jamaica Stock Exchange's website. So you can go to jamstockx.com. So when you scroll down on that page, depending on what banner or ads they may have at the top, a little bit further down, you'll see find listed companies. So in this case, you can search for the company name. So in this case, I'm searching for Mailpack. I click search and it will show me the following information about the company, right? So it returns this result. I see the company that I'm looking for. So it's Mailpack Group Limited. That's the full name of the company. And so once I click on that link, it's going to bring me to the instrument summary page. The instrument summary page is the page you want to go to for all the up-to-date information about the company, right? So their most recent price, news, any dividends announced, a summary of their earnings, any corporate actions that may have been announced. And so this is a page that you really want to bookmark for the companies in your portfolio, as this is going to be your go-to place. So if you, for example, may get information from a broker or information from an app, it's all going to originate on the Jamaica Stock Exchange site. So that's your first place or your first point of reference. So I'll break down the information that you see here from the top left all the way over to the right. So first we have the name of the company. So Mailpack Group Limited is the business name of the company. What's in bracket is the ticker. So the ticker is Mailpack. Now, usually when you're placing an order or doing a search, you're searching for the ticker. So it's good to get familiar with the ticker names because most apps are going to have you using the ticker, right? You have this ISIN number. I'm not going to talk about that right now. And then below that, we have the most recent price. So this screenshot was pulled at the date of this recording. So the price today is $2.63. And what you're seeing beside it is a green arrow. So usually if the price went down for the day, it's in red. And you'll see the arrow pointing down. In this case, the shares went up by 2 cents or 0.77%, right? And it says here prices are updated approximately 2:30 p.m. daily. So at the end of each trading day, the price is updated and you will see what it traded at for that day. And next we have 3 charts below that. The most basic chart is the line chart. Then we have the candlestick chart and then the open, high, low, close chart. I won't get into those right now. We'll keep it very simple for you. But the line chart will show you the average price per day for a particular period. So you're seeing where it's saying 3 3M here, which means you're seeing the price history for the last 3 months, right? And what you're seeing below this section here in blue is the volume. So up top is the price, below is the volume. So depending on a given day, the volume may be high or it may be low depending on what took place that day. And so this gives you a good snapshot of what happens for that particular trading day. Now over the right, you have the option to change the stock that it's showing. So where it says select stock, you can click on that drop down, start typing the name of a company or its ticker, and you'll be able to click on that and you'll see a different stock depending on what you choose. It will also have a previous closing price, the open price for the day, the bid price, that is the best buy price at the top of the queue, or the highest buy price. Then you'll have an ask, which is the lowest selling price, and then the volume traded for the day, that's the total volume traded for that given day, and then the last traded price. So these are just some price statistics that you'll see. And then to the right at the lower section where you see summary, some other information is there that we'll get to on later slides. So I know this may be a lot of information for you, but once you get used to it, you kind of know where to look depending on what you're trying to accomplish. Right below that section where you have the line chart, you'll have some more price and volume information. Now starting with the left, it will show you the range in terms of how the stock traded for that day. So it traded as low as $2.60 and as high as $2.65. It will also show you the last 52 weeks. So 52 weeks prior, the stock, well, within the last 52 weeks, it has traded as low as $1.90 and as high as $2.80. The volume for the last 52 weeks would have ranged from 1,002 shares. That means on at least one day, it traded just 1,000 units. And then at another day, it traded as high as 5,188,000 units, right? So in terms of the market value of shares, it takes the current price and it multiplies by the shares outstanding, and that gives you the current market value of shares. So this market value of shares will change depending on the current price or the number of shares outstanding. All right, so in Mailpack's case, they have 2.5 billion shares outstanding. So if you multiply that by the $2.63, that will give you the market value as at today. Then on the right-hand side, we have the statistics for the price in terms of week to date, month to date, quarter to date, year to date. So we're in the first month of the year. So the month to date and the quarter to date and the year to date are going to be the same, right? But of course, this is updated daily and it depends on how the stock would have traded. These numbers may change. So next we have a section that speaks to the summary. That's the page that we're on. That's why it's highlighted. Price history will show you a table with the different prices for the different days. Latest news will show you the most recent news released about the company. Quarterly financials will show you the company's quarterly reports. Now, as a publicly listed company, they are required to publish quarterly reports. If the company is late, they usually will issue a statement. If the company is continually late or they've missed too many deadlines, then the JSE may suspend the trading of those shares until the company complies. They're also required to publish annual reports and audited financials. Below that section again, you'll have like a performance breakdown. So what you're seeing here are the quarterly earnings. So you'll see here you have Q1, Q2, Q3, and Q4. So depending on when you're looking at this or maybe when it is updated, you'll see at a high level the total revenues that the company, the total earnings for the year that the company has produced, based on it showing you the same information that you'd see in the quarterly report in a graphical format. And below that section, they'll have it in a tabular form, which I believe I have a screenshot for, yes. So we'll show you the same information in a tabular form. And as I said, this is subject to the information being updated. So depending on the company you're looking at, Unfortunately, some of them may not all be updated at the same time, or some information may be missing, but you certainly want to at least look and see at a high level what this information is showing you, and that will trigger whether or not you do further research. Below that section, so all of this that I've shown you so far is on one page. Next, we have corporate actions. So in this case, when I went to the page, it was showing the same thing duplicated like 10 times. So I only took the first line because it was pretty much being repeated, but this is an example, and I'll show you an example of a recent announcement for dividends. So a corporate action is anything like a stock split or a dividend announcement that companies may announce. So in this case, they would have made a dividend payment on the 9th of December 2022 at 4 cents per share. All right. So this is what a dividend announcement looks like. So for Mailpack, the last dividend announcement I saw was on February 16, 2024. Now we have a whole video explaining how dividends work, breaking down the announcement and so on, but this is just for a quick overview. So it says here, Mailpack Group Limited advises that the board meeting to consider a dividend proposal was postponed, and at that said meeting, the board declared an interim dividend of 3 cents per share to be paid to shareholders on record as the close of business on February 29th and a payment date of March 11th, right? So a dividend, so you have two things to look out for: a dividend consideration and then a dividend announcement. So usually a company will tell you when they're going to meet to consider dividends, and then once they've agreed to pay the dividend, they'll make an announcement for that dividend. Okay. And this is what the latest news section will look like. Now, this is going to be common for every single company, as I mentioned. Some companies, well, all companies are required to make certain announcements depending on what takes place, their quarterly reports, their announcement for AGMs, their annual reports, etc. But different companies do a better job of keeping you updated. So this is one place you look at, but certainly you want to look at sources like the company's website, their social media pages, maybe programs that cover the market, etc., so that you get a full picture of that company. So that's it. Now, that was a lot to go through in about 43 minutes, but that gives you an understanding of how to get started with your first 100,000 as an investor. And of course, if you were to think about how you'd allocate those funds, as I mentioned, you're thinking about a couple of things, like whether or not you're investing for dividends or cap gains. If you're investing for dividends, it's pretty straightforward. You're looking at the yield. You're choosing maybe no more than 2 or 3 dividend stocks to start with. Ideally, if you could start with one, even though it's just $100,000, you'd start there. But the point is, you're going to be researching companies, going through that iterative process, and building your portfolio over time, right? So you're going to start with 100 and build from there, right? Because it's very unlikely that you're going to invest $100,000, leave it there, and get to the point of wealth, right? Next, if you're investing for capital gains, you really want to look at 3 areas. You're looking at either value companies, growth companies, or blue chip companies. Now, blue chip companies, it's going to be the safest bet out of those 3 types, but of course it may not give you the type of growth depending on whether or not you're an aggressive investor, or maybe well, it really depends on what you're looking for there. For value, it will take some research. You'll have to know what the companies are valued, how to do that research and compare it to others in the industry, and then make your decisions based off that. And for growth, these are the smaller companies, likely junior market, that are expected to grow at a certain pace. So you're looking for companies that have a very aggressive plan for growth, whether expansion, whether acquisition, whether new markets, etc., maybe multiple locations opening, so on and so forth. So those are the 2 basic ways to look at it if you were starting with $100,000. And that's what I would do 8 years after I started. These were the things I wished I thought about, because of course when I just started, going through the motions, buy some here, buy some there, not really having a clear strategy or kind of purpose to what I'm doing. And so my hope is by doing this video, it will help persons who are just starting kind of not make the same mistakes that I made, because it took me a couple of years to actually get momentum to figure out what I was doing and to make wise investment decisions, right? So that brings me to, of course, the next step for you is to join our investment challenge. You don't want to go through the motions like I did. Instead, you want to learn a set process by which you can invest. That's what the challenge offers you. So it's our monthly program. You can sign up right now. There's a link in the description of this video, and we have calls once per month where we go through different investment topics, all with the aim to help you get better as an investor. All right, so you can join monthly or annually. If you join annually, then you have the option to meet with me one-on-one, and you get some other value adds if you're able to sign up for the full year. And then, of course, you get a discount on the price as you would be signing up for the entire year. And then, of course, I also want to invite you to join our investment community if you're not already a member, because this is where we'll help you to just answer basic questions, point you in the right direction. This is where we meet up as a community and just help each other to get better at this investment process. All right, so I want to thank you for watching this video. At this point, I'm going to take some questions here, if there are any. And this is a part that's going to be removed from the video after, because we're going to leave it a little bit, well, we're trying to keep it under an hour here. So are there any questions for me? For those who are watching, okay. So I am Lynn. Hopefully I answered that question in terms of how you start, right? So you joined 33 minutes in. Hopefully I answered that question for you. Let me know if you still have that question. Let me see. Yes, guys, thank you. We did have a glitch, but we got that sorted out. Thanks for those who are waiting patiently. So what's happening with the corporate actions? They're all so yes, so that's something that you pretty much just have to report. They're not always updated. You kind of have to reach out, let them know what's happening, and hopefully it will be resolved. But there are some that are just kind of ridiculous in terms of the dividends. They kind of scare me because sometimes I'm not sure if I can trust the information that I'm seeing. So that kind of makes me a little nervous, but it does happen from time to time. That's a nice thumbnail, caught my attention. Well, that was the hope, right? That's a thumbnail should make you want to click, right? So that means I did a good job. Only thing with JMB, I don't see them as a broker. Okay, so I think that was clarified by Renee. Thank you, Renee. So JTrader is one of those brokers that have their own platform, right? So it's if you choose to invest with JMB, you have to use their Moneyline platform. So yeah, I'll just leave it there for now. Grace, market cap is lower than Guardian and Wisynco. It is crazy, for real, right? I'm going to be doing a video on Grace soon. So they had a nice acquisition completed recently that I want to talk about. So Dejanay is asking what's the difference between main market and junior market. So the junior market are considered, as I said, they're almost treated like startups. So these are companies raising a small amount of capital. There are kind of limits that they will have. There are benefits that they get as well. So for example, they get a tax break. Main market companies are simply larger companies. They're maybe raising more than what the junior market cap limit is. And they will usually have just a more, I lost my train of thought. just think of the main market as those more established companies. I think I paused there because there are some junior market companies that have been around for a while. So it's not necessarily that they're not established, but main markets are larger cap companies for I think a simpler way to explain it. And those are where that's where you'd find the blue chip companies. Main market companies comprise of large companies. Okay, thanks for that, Christopher. What's happening on the stock market since recently? I saw billions of dollars being moved. What exactly is going on? I mean, people are buying and selling. That's how the market works. That's how it should be. An active market is good. Volatility is good. And so these are things you look for because we want a market that's active, right? So Michaela is asking, if I place my own orders on JTrader, does that update my bank's investment platform in my account? No. So how it works? Well, if you order and you've purchased, when you get your statement from your broker, it should show that. It will show your purchase price, your gain and loss, depending on how that broker does their statement. But it depends on what the investment platform shows, right? Not all of them have an investment platform where you can see that information, but it should at least show you. But I've seen it in some cases where the broker doesn't always show you how much cash you have available on JTrader. Because once you do a funds in, they'll treat that as cash that is spent. And then whatever you have left on your account, they may show. So each broker does it a little differently. But I think I understand what you're asking, and in some cases you should see that. Is there a cost difference using broker platform versus JTrader? No, there's no difference. For someone who does not have 100K, do you think they should save up to 100K or just... absolutely not. You don't need to wait. Start investing right away. But of course, we wanted to just put a number. It's an arbitrary number. Persons can start anywhere. Persons can start with 5,000. So that's why we put the minimum requirement of $5,000. So you can open an account with that. But of course, you'd be surprised how many persons will come to us and say that's the number they're starting with. So that's why we chose it. It's arbitrary, as I said, no different than a share price or an IPO price being $1 or $2. Javon is asking, how do I take profit from a stock I've purchased and now see growth? The investment challenge is the best way to answer that one for you, because it's not... the simple answer is you take profit by selling some or all of your shares. The more detailed answer is found in the investment challenge. Keanu says, for me, who's just started out, how many stocks do you think I should start with? Not necessarily in a specific niche. As I said in the video, I think if you're, depending on how much capital you're starting out with, my general my opinion is that as a beginner, you should not have any more than 4 to 6 stocks overall. If you're just starting with, let's say, 20,000, 30,000, 40,000, it would make sense to really start with one stock, honestly, because you're not going to get any... If you split 40,000 or 50,000 across 4 stocks, 5 stocks, that's when you get those dividend checks for 10 cents or 30 cents or 45 cents. So you're not going to have anything meaningful there. So you want to build up, because the point is you're going to be investing for the rest of your life, right? So even though you start with 10 or you start with 20 or you start with 50, you're going to be adding to that every month. And so over time, you'll be able to build a reasonably sized portfolio, maybe 6 to 10 companies over time. Sure, you'll get there, but you want to start small. Sandra says, I am new and I'm not sure what that word you're trying to type. I don't know if that was supposed to be interesting, but Sandra, you're welcome to join our community. Join our investment challenge. We'll help you get started. And of course, subscribe to this channel and you can check out all the videos that we have. Wish we had some ETFs on the JSE. Me, do I wish that? If we had ETFs, I'm not sure I'd buy. I was gonna say me too, but I'm probably interested in it for diversity of the market and not necessarily that I would buy in it. But yeah, it would just love to see our market develop some more, for sure. Any word on when the GOJ is offering its portion of TJH shares? Kayla Moore, if I knew that information, do you think I'd be allowed to say anything? I don't know. I do not know. All right, so I believe that's it for all the questions. Thank you guys so much. As I said, I'm going to remove the Q&A from this video because I wanted to kind of I wanted to keep it on an hour. It's still under an hour, so maybe I'll leave it. I'm not sure. But just to remind everyone who is joining here, maybe you just checked in, really want to invite you to join our investment community. That is the place to be. We would welcome you with open arms. It's a great place to share questions, share updates, stay motivated, because the community is extremely helpful. Awesome community that we've built over the years. And of course, we've migrated to a new platform, but it still it's the same personality, right? And so we really welcome you to join us, and I look forward to seeing you in our next monthly meetup. All right. I'm just looking for any questions before I wrap up this stream. In dividend-paying companies, do you think a minimum number of shares would be 500,000? Christopher, I know you have money, you know. It depends on where you're starting out, but you don't want to wait until you get to that number. But of course, you do want to set a target number of units so that your dividends are meaningful, all right? Ron says, I'm not new to investing, but learned something new. That means we accomplished our goal. Thank you for your service. Hey, this is what I love to do, Jamaican Express. So you're welcome. Thank you. Excellent content as always. No problem. I think, yeah. So I need hand-holding with all of this, looking to do a one-on-one. Of course, Kayla Moore, I think you're already in our community. You know how to access that information. Just go to the menu up top. You can book the session there. So anytime you need help, I am there for you. Roshali is asking, how many shares is reasonable to buy in one stock for a beginner? As much as you can buy. As much as you can buy. But the main thing that you want to think about, Roshali, is that once you make that first purchase, you're going to be purchasing forever and ever and ever and ever and ever and ever and ever. Okay? So it doesn't matter how much you start with. You're going to be adding to that over time. You're going to be buying every month when you get your bonus, when you get your pension, payout if you're switching from one company to the next, when you sold your car and you get that extra money, when you get your uniform allowance or your travel allowance, when you have that side business and it pays you some extra money, you're going to be investing all of that, right? Hope that helps. I sounded like I was preaching there. Yes, for sure. So you can check the description for the link for the one-on-one consultation. Now, I cannot tell you what to buy, and I have to say that, and I just realized I didn't have the disclaimer at the start of this video. I am not a financial advisor, so I can't tell you what to buy, but as a coach, I can guide you and help you identify a process by which you can make those decisions for yourself. All right. Yeah, so Christopher, you know that, well, I'm going to check with my wife, and if I'm going to see if I'm going to go live in the community or not. It depends, right? So let's see. Can you explain again how to join the investment challenge? Thank you for asking. So the investment challenge is our monthly investment program. You have two ways to sign up. You can sign up for the year, or you can sign up per month. Now, we are having a special on the annual plan that actually ends today. So after today, the price goes from $480 to about $497 for the entire year. So it does go up. The one-on-one consultation will no longer be a part of that package. But at any point you're seeing this video in the future, you can sign up for the year. And maybe we'll have different offers in terms of what's included. But it's our monthly program. We go over various investment topics, all with the aim of helping you to become better as an investor. So things like how to construct a portfolio, how to do research, how to buy and sell, how to invest in the US markets, how we're going to start doing stock reviews soon. So we did a poll. We asked everybody in the group with stocks they want us to research. Then we're going to go through that process of research. We're going to have some special guests joining us. So think of it as a membership program that is designed to help you learn and grow as an investor. And it's something that you can just look forward to being a part of for as long as you're investing, and we will always be there to help you. All right. So Jeffrey is asking, how often should I purchase in order to minimize all? Well, Jeffrey, every time you purchase, you're going to pay a fee. But the point is that you want to ensure that you are making a profit so that the fees are irrelevant, right? So that's how the brokers make money. That's how the Jamaica Stock Exchange makes money. So there's always going to be a fee. Now, you can minimize fees by how you invest. And then, of course, that's a perfect topic for us to cover in the challenge. So I probably will do that. Thanks for that, Jeffrey. Okay. All right, everyone, I want to thank you so much again for watching this video. I pray that this was valuable for you. Again, I invite you to join our investment community. That's why we're here, to help you learn and grow as an investor. Join the investment challenge if you're looking to take the next step. And then, of course, if you have any questions, feel free to reach out to us on social media, or just use any of the platforms that we're available on, or our email address, and we'll be sure to respond to you and give you any support that we can. So there is a video that I'll recommend that you watch right after this one. It's called Buying and Selling Stocks on JTrader Pro. This is where you're able to learn how to place an order, how to understand the queue, and how to make certain decisions to help you add stocks to your portfolio or to take profit by selling shares whenever you're ready.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.